Bitcoin first emerged in 2008. The initial paper and software came from someone going by the name of Satoshi Nakamoto. And the idea behind this system was that it would be a financial network outside the control of government, outside the control of banks. And it would do this by creating this sort of network, much like the internet, that was run by the people actually using the currency. In 2011, a series of booms and busts overtook Bitcoin and brought it into the public consciousness. Like any utopian technology, Bitcoin has really run up against the outer limits of what it's trying to do as it has spread around the world.
La gente tiene que entender mucho Bitcoin, en qué eso es, cómo existe, y no puede entender que es simplemente un archivo, un libro donde están anotadas todas las transacciones que están ocurriendo a nivel mundial, y además de que ese libro es público, de libre acceso. Y lo bueno, y lo bárbaro, y lo revolucionario, y lo groundbreaking de este asunto es que el libro está siendo escrito en consenso. Imagínense si hay un poco de gente que le encanta un libro como, no sé, vamos a poner cosas que ponen en consenso a los cristianos, la Biblia, o cosas que ponen en consenso a los judíos, en la Torá. Pero estamos hablando de un libro donde ponen en consenso todos los usuarios financieros y es una forma donde todos podemos estar de acuerdo en lo que se escribió ahí, todos lo podemos revisar constantemente. Eso es Bitcoin, simplemente. La primera vez en la historia de la humanidad que nos podemos poner de acuerdo de una forma tecnológica para poder hacer algo en conjunto en lo que estemos en consenso. Y eso es un cambio de paradigma en lo que es la evolución de la humanidad. Creo que vamos a hacer los trabajos en consenso y descentralizados. El futuro es brillante.
Never before was someone able to put it together in a real system, a software system, because double spending was the biggest thing that you couldn't overcome. With gold, it's easier. With something physical, it's easy. I give you a piece of gold, you have it, I don't have it because I gave it to you. But with digital information, I give you a digital photograph. It's in essence, I'm giving you a copy of it. When I give it to you, you have it, but I also have it. With currency and digital money, we can't allow for that. Because if we did allow for that, then it's practically useless, right? So how do you solve that problem? Researchers have been looking at this for the last 20, 40 years. And finally, 2008, 2009, we have a version of Bitcoin that solved the problem through the notion of a global ledger called blockchain.
Blockchain's a buzzword. So I'm not entirely sure what it means. I think it depends on the speaker. In general, I think when people say blockchain, they mean the idea of a record of transactions that's secure and distributed.
Where we sit today, companies like Facebook and Google, Amazon, Apple, they are increasingly sitting on all of our data. Every time somebody amasses one of these big monopolies, something comes along that's just a complete and total game changer, and I think it's blockchain technology.
It is a buzzword, but at the same time, it's a word that refers to a particular thing, and that particular thing is really useful, and you can build a lot of stuff on it. There's a lot of ways to describe it. Like one phrase that Robert Sams used that I really like is decentralized automation. So the idea that you can sort of run various kinds of processes in a way that, number one, is completely automated, so you get just huge gains in efficiency out of that, and number two, that's decentralized, so which means that number one, like there's no sort of process that can get corrupted by one particular entity. And number two, there's no process that just requires a central entity and then just sort of naturally creates too much opportunity for that central entity to become a monopoly.
There's a variety of ways in which this technology, in its current iteration, and by that I mean distributed ledger and blockchain rather than Bitcoin, moves away from the founding principles of Bitcoin around anonymity and replaces it with certain known actors within a regulated financial system But none of that inevitably means anything. Here's the way I would say it. People always overestimate what technology can do in 2 years, but underestimate what it can do in 10.
The people who think that somehow the Bitcoin is going to bring in some libertarian paradise where we're not going to have know your customer rules and we're not going to have rules on money transfer, that won't happen. The people who think that all the currency is going to be debauched and we're going to have hyperinflation and Bitcoin's our salvation, I think they're wrong too, in a world where we've got a real struggle to get up to 2% inflation anywhere in the industrial world. But is the blockchain technology going to be fundamental to reducing frictions? I think the answer is overwhelmingly likely that it's going to be yes.
Larry Summers was talking about how blockchain is here to stay and Bitcoin technology is amazing and it's going to change all the ways that the financial systems in the world work. But if early Bitcoiners like myself think that we're going to be able to have anonymous transactions that are private from the government and that people are actually allowed to do what they want with their own money, he said we're wrong about that. But I think one of us is going to be wrong, and I don't think it's going to be me. I kind of knew that that day would come in which the people that share my worldview are going to be the minority in Bitcoin. But I think that's also a sign that we're winning, that now this many other people are interested in this technology, that someone that seems to have shared a similar worldview to my own created. That's pretty exciting. Bank of America and Wells Fargo and Western Union are here and in space. That means we're winning, and hopefully it means that they won't be able to co-opt what we've built so far and turn it into some sort of hierarchical system in which, you know, governments are able to monitor every single transaction that people make. That would be my nightmare outcome.
There's now sort of this battle between, you know, the people who originally brought this thing into the world and who wanted this to be a sort of revolutionary new technology that would help free people from governments and banks. And now, on the other side, there are governments and banks that are themselves trying to use this technology to change the way that we use money, to change the way that information is stored. And I think it's very much an open question as to where this ends up. Mining sits at the foundation of Bitcoin. Initially, the people who were running the Bitcoin software and trying to win in this Bitcoin mining race were the sort of fanatics who had fallen in love with this idea. Over time, Bitcoin mining has essentially become a specialized profession available to people who have some ability to set up these installations around the world. And so mining has increasingly become this specialized profession. That's become something of a problem because the design of the Bitcoin software gives decision-making power to the miners. And whatever software they choose to run, that becomes the software and the rules for essentially the whole network. So these miners around the world have a sort of voting power over what the Bitcoin software and what Bitcoin itself looks like.
So when Satoshi Nakamoto came up with it, the real key question is how do you get these 21 million out there? If he all gave it to himself, he will have a huge burden who he gives it to, or he can give it to the men of the world, or to the women, or the children, or to the Americans, or to the poor people in Africa, or the starving people, or to the communists. Who do you choose to give the 21 million? So the only fair way he came up with was to give it for free to whoever wants it.
The miner's job is to take all of the valid transactions that they see, and then they gather up these transactions in what are called blocks, and then they perform this busy work, and they're kind of in a race against all the other miners to have the privilege of being the canonical record of the transactions that happened. If they win that race, then there's a very special transaction at the beginning of every single block that awards them brand new Bitcoins. As
Bitcoin price rises, it incentivizes somebody to turn on mining equipment somewhere in the world, then that adds this processing power to the network, which is seen by the system. And so the system makes an adjustment to make it harder to produce Bitcoin. In my same power footprint here, I produce essentially less and less Bitcoin over time, but the value of each Bitcoin rises.
So we've reached a point where the determining factors in who can profitably mine Bitcoins is access to cheap computer hardware and access to cheap electricity. And right now, the place where those two things are the easiest to find are China. And so you have essentially 2/3 to 3/4 of all of the Bitcoins being mined in the world going to these mining installations around China.
大概有15个人左右在我们就是公司工作，他们主要的工作是对于机器的照看，是的，他们在就是电站里面就是生活居住。因为就是说。现在电价比较低廉的这个地方是相对于来说比较偏远的一个地方，而不是说是一种大城市里面。所以说，大家对于真正挖矿的所在地，就是说不是特别了解，有这方面的考虑。因为就是说，因为你有竞争嘛，中国的那种挖矿这一块的人来说，相对于来说比较多的。所以说，在一个相对于只有自己的地方，能享受这种低廉电价的那个地方，只想说是自己用，是这样的。
They essentially, by having the majority of the mining power, they hold all the cards for whose transactions get included. That's another big one. Think about that. Think about the possibility that due to maybe a governmental ruling or something, no transactions originating in the US for Bitcoin should be accepted to any of the blocks in China. That's a very scary, scary concept. It should be extremely scary to the people who've invested in the businesses that are built on the Bitcoin blockchain.
One of the side debates that you also see when you're talking about China is a question within the Bitcoin community about the role that miners play in China and whether or not there should be some sort of concern or some attempt to counteract the growing power of China in the mining space, in the Bitcoin blockchain itself. It does raise a very interesting issue around governance models of public blockchain. What do you do in a situation where one particular entity or a group of entities acting collectively gain enough power in an open system that they can begin dictating the governance of that open system?
It's something of a test for the philosophy behind this technology. I mean, one of the basic ideas here was that the people working together could create a better system and could create better software than any one startup or entrepreneur could. I mean, this was the idea of communal wisdom. The hive mind would be more successful than anybody working in isolation. It's not at all clear that that software being developed by volunteers all around the world is going to be able to adapt quickly enough to keep up with the existing powers and all the resources that they have to put into this experiment. Bitcoin is supposed to run on a sort of democratic process aimed at reaching a consensus. But over the last year or so, it's been increasingly hard to find any consensus about what this thing should look like. At the most basic level, the battle over Bitcoin today is about how many transactions should be running through the network. On one side, you have this camp that wants to expand the number of transactions that can go through the network so that anyone can send a transaction over the network anytime, essentially for free. On the other side, you have this camp that essentially wants to keep Bitcoin smaller in order to assure its security and the decentralization of the network. This battle has become a sort of political civil war within the Bitcoin community, where the two sides are really fighting over the fate of what this system looks like.
We're moving to a potentially dangerous point with information. Today's society has less kind of freedoms of expression and freedoms of association than previous generations, because the technology didn't exist and wasn't sort of archiving and collecting it all, and the conversations were happening in a physical environment where not everything is recorded. As things move onto the internet, there's sort of this default that everything's being recorded. And you also see this with the sort of reaction to Snowden's revelations that, things are actually much more invasive than people anticipated. And international governments are sort of hoovering everything up about all, basically everybody. You don't have to have committed a crime or even be a suspicion of committed a crime. They're just recording it all just in case they ever want to go look through it. What encryption technology does is pulls the balance back a bit towards the people regaining the privacy expectations they have. As we work on improving Bitcoin and scaling Bitcoin, we have to preserve those security properties. Bitcoin's security and permissionlessness depends on decentralization.
So today we have these 1 megabyte blocks, which effectively goes to about 5 to 7 transactions per second. And for the first 7 years, it's never been a problem. But finally, now we're in their 8th year, the blocks are getting full. It's kind of like the highway. The 8-lane highway is finally getting congested. So now the question is, do we just build the 16-lane highway or 32-lane highway? That gets kind of ridiculous.
The simplest engineering solution is just make the block size bigger.
Or maybe we impose, higher throughput, more cars, but more buses, more carpooling, that kind of stuff. So it's going to be a combination of both. The way I see it is not just transporting at the Bitcoin layer, but there'll be additional layers on top of Bitcoin, what we call layer 2 services, whether it's side chains, other technologies like Lightning. So those will solve some of the capacity and transaction problems.
These layer 2 protocols are more network efficient. They don't broadcast transactions, they send transactions between the people involved in the payment and maybe routers. And they also improve the speed of the transaction. So the transaction can clear quite instantly, whereas Bitcoin transactions have some kind of trade-off where you might get a 10-minute or 20-minute settlement time, depending on the amount of value.
Part of the engineering community thinks that the better solution is to go with what are called off-blockchain solutions, where transactions don't settle on the Bitcoin blockchain, but happen off of the Bitcoin blockchain. There's been a lot of work on that, a lot of innovation on that. I'm actually pretty excited about all of that work. It's really interesting technical work. My big disagreement has been that we should not put all of our eggs in that one basket, that we should also do the dumb engineering thing and just increase the block size now because we can and because there's no reason not to.
The scaling advantages from layer 2 are much larger than increasing the block size. So specifically, I would say that assuming that the layer 2 technology pans out as people expect, it's probable that the story next year will be a different one, which is there's this enormous excess capacity. And
you're saying that the debate that we're having now about scaling versus decentralizing might not be a debate a year from now.
Yeah, I think that's my expectation.
All the transactions in a block can carry a transaction fee that's paid to the miner as a bribe, essentially, to include my transaction in your block instead of somebody else's. If I have my way and we have much bigger blocks, transaction fees will always be really low. But if you do the math of millions of transactions in a block, each paying a cent, half a cent in transaction fees, that will more than make up for that decline in the block reward.
Opponents who want scaling fast or say we should make the boxes bigger and put in a lot of transactions. The downside is if you make the boxes really big, the blocks really big, then affects how well other people can own and distribute this global ledger. So if only a few people can keep up with the so-called big blocks, the world falls into a more centralized way of managing Bitcoin.
Ideological concerns that we'll end up in a place where Bitcoin is only a tool for elites or big companies. I think those are really overblown.
Initially, I think there was an idea that Bitcoin could be a lot of different things, that it could be a sort of digital gold, but it could also be a new kind of PayPal where you could run transactions around the world. As time has gone on, I think it's become clear that if this system is going to expand, it can't be everything to everyone. It has to choose what it wants to be. I think Bitcoin has been in a sort of holding pattern for the last year or so as people try to figure out whether the problems Bitcoin has encountered can be resolved or whether you're going to need to move to some other sort of system to get the benefits that Bitcoin promised.
You were saying it doesn't matter if Toshi is him?
Yeah, I don't think he has that much power at this point.
I don't think it was one person.
No, I mean, back before this announcement, I thought it was one person because, you know, actually, honestly, people think it's this incredibly massive achievement, but it's hitting at the right thing at the right time. I thought it was just some, you know, random 30 to 50-year-old male, quite possibly actually Japanese. I know it looks like I was close to being right on everything but the Japanese part. So I discovered Bitcoin back in 2011. Actually, the first time I heard about it, my dad told me about it, and he said, it's this real interesting new currency. It's not controlled by any kind of government. It's decentralized. I should check it out. I started like seriously getting on the forums, trying to kind of earn some Bitcoins myself by just writing articles for various different blogs. Eventually, I started getting more and more into it. I ended up co-founding Bitcoin magazine.
So in high tech, we talk about the network effect. Like eBay had fantastic network effect. There's two sides, buyers and sellers, right? People auctioning stuff and people who want to buy stuff. The bigger the marketplace is, the more buyers you attract, the more buyers there are, the more people want to sell there. That's network effect. eBay is the 800-pound gorilla. In the cryptocurrency space, right now Bitcoin is the 800-pound gorilla.
In terms of a technological proof of concept, it has inspired, you know, developers around the world, financial institutions, governments, stock exchanges, pretty much everybody doing anything in financial services has paid attention to the technological achievement. The currency and the store of value, less so.
The blockchain technology that Bitcoin introduced has been eclipsing the original application of the blockchain, Bitcoin.
At the end of 2013, people were getting interested in blockchain technology. They were getting interested in this idea, particularly that you can use it for applications other than Bitcoin, and that Bitcoin, the currency, and blockchain technology are two different things.
See you, dude.
Drink that beer. I don't know which color you are.
Should be filming the screen right now. I'm about to light him up. The world can change completely based on what this technology can do. Like, you know, it's like alien technology, basically. Like, we've never had it before, and now we've kind of got it, and everyone's kind of rushing to play with it. So I think that's what's exciting about it. You know, like if you look at for different developers, like that build products, you know, they always want to try out new cool stuff. So like, you know, if they were building before the internet, they were building software, and then they started building web pages, which was really cool. And then from, you know, after building web applications, you know, mobile got much more cool. Like, you know, it's like more challenging or new horizons to build on mobile instead of web. And I think like blockchain is kind of that next step.
So $1.1 billion has been raised to date by cryptocurrency and blockchain startups. That's a really, really significant number. The other point that's interesting with Q1 especially is that we saw a reversal of the trend. There had been a declining level of investment in the industry over the last several quarters, both in terms of overall fund flow and average deal size. This really changed in Q1 with the emergence of blockchain as a distinct investment category.
Identity Mining Global is a provider of risk management services.
We see a blockchain really as a new medium for financial assets.
T0 is a platform for the exchange of digital assets, which we've created using blockchain technology. It's specialized for the exchange.
Rather than having to have a piece of plastic that you got to remember with you, what you could do is you could use your mobile device.
We do blockchain analytics, especially we started with a Bitcoin blockchain, public blockchain. We're going to move now next to the Ethereum public blockchain and eventually connect to multiple blockchains.
We build a proof of concept, this decentralized energy company that connects neighbors in a rural environment and counts their consumption and production of electricity on the blockchain.
Satoshi, this news about the
Right.
Do you believe Bitcoin? It doesn't matter.
I am Satoshi. No, I'm kidding. Does it matter to me or to us? I don't know. I guess not.
We refer to ourselves as Bitcoin agnostic. If Bitcoin finds itself successful, great. If Bitcoin doesn't find itself successful, that's great. That doesn't impact what we're trying to do.
I think here we're pretty agnostic in terms of which one's the one. When companies are fighting for your eyeballs using blockchain tech, competing blockchain tech, that's when it really starts. Right now, everyone's still building the cars to start the race. It feels like, everyone's still, this is in development. Barclays has got this program. They've got this program in like Commonwealth Bank, and all these big institutions are starting to, build the pieces and dedicate, blockchain labs and have all these people that are getting resources and monies get thrown at it. Now, I'm not saying that those guys are going to be the reason why we all feel it, but it might be a bunch of hackers sitting in a bedroom that make something really awesome that that changes your life, and that could be it. So, I don't know. We'll wait and see.
Beyond that, there's the Ethereum vision that this isn't just going to be place for financial transactions. This is going to be how basically organizations and informational flow around the world happens as well. In some ways, that's even more ambitious. That's a vision of the future in which you essentially have this enormous global computer on which all of the software and decision-making and political processes can run. Ethereum was built to be a sort of new and improved version of Bitcoin and to do things that Bitcoin couldn't do. The original aim with Ethereum was to create not just a decentralized money, but essentially a decentralized global computer that could do computational problems. Ethereum has its own currency, Ether. The Ether, though, are really there to serve as sort of gas for the computations that are going on this network of computers that are running Ethereum.
The original reason why I like the name is that ether is this sort of thing that, you know, scientists were hypothesizing about in the 19th century, where people were thinking sound waves travel through air, water waves travel through water, so what do light waves travel through? And they hypothesized this existence of a medium that kind of permeates the entire universe, that's in that itself is kind of invisible, but it provides this kind of global reference frame, and it is, in some sense, you know, sort of base layer that the universe runs on. And I actually felt that was a kind of fitting analogy for what I wanted to do. Деть биткоин какой-то неправильный подход в этом говорить. Я бы сказал, что Ethereum есть фичи и возможности делать такие вещи, которые у биткоина нет. То есть это так же, как сказать, что там может ли там телефон победить апельсин.
So Ethereum is a decentralized application platform. Its parent, Bitcoin, is more of a platform for transmission and storage of value. So Bitcoin was essentially an experiment in monetary theory gone wildly successful. You can think of Ethereum as a decentralized World Wide Web. It will eventually be able to run all the different kinds of applications that we see on the World Wide Web.
At the end of the day, it's this kind of fabric for what you could almost describe as being a kind of new internet infrastructure.
Eventually run a Facebook-like application. The difference is that it would be peer-to-peer, decentralized rather than a client-server type architecture. Ownership of data, ownership of communications or informational emissions will rest with the users of the system rather than the owners of a company like Facebook.
I think Vitalik knows that he's building a giant, globally distributed, reprogrammable supercomputer on a scale that mankind has never seen before. And he's doing it through a mechanism which initially supports this concept of smart contracts and issues a token just like Bitcoin, so there's value being created by the mining that we're doing. But the biggest difference is that Ethereum produces mines that are reprogrammable to tasks that we don't necessarily know what they're gonna do yet.
One of the highest ambitions of Ethereum from the beginning was that you would actually be able to program the functioning of entire corporations into this global computer. And you would have not just a decentralized currency, but a decentralized company that would run according to the rules that you had programmed into this network. So there was always this idea that Ethereum might allow what people call decentralized autonomous organizations.
So decentralized autonomous organizations, there's this idea that you can have these kind of automatons that are written in code that's set on the blockchain and that are governed through, you know, smart contracts. It could be like some voting mechanism. It could even be some kind of voting by prediction markets or, you know, some other new thing.
Would be a sort of company that would be run not according to human decision-making or human rules, but instead according to rules that you programmed into the Ethereum network.
Can actually leave this sort of decision-making up to an artificial intelligence. So if you had a board, you could basically say, hey, we can't come to a consensus, let's just refer this to an AI. And everyone just delegates their vote to the robot, and then the robot just makes the decision for them. And then eventually you could imagine that many boards are just run by AI and occasionally intervened by humans.
DAO attracted something like $150 million in the course of a little over a month. Basically, you know, on the first days that it was operational, you had this attacker who came in and managed to take advantage of the contracts in a way that basically siphoned about half of the money into an account under the control of the attacker. The one saving grace in this attack was that the money that was siphoned off, because of the way the DAO was written, couldn't be used for 30 days. And so it began this countdown to try to figure out how to stop the attacker from getting control of the $60 million.
And so we have this time in order to determine whether we're going to do something about it or whether we're just going to let it go.
I don't think that Ethereum has the balls to
leave the theft as is.
They're talking about hard forking the entire blockchain.
It set off this really pretty philosophical debate about how to deal with a problem like this in the realm of smart contracts and virtual currencies. And one of the great attractions of the blockchain technology and of Bitcoin and Ethereum was that this record of transactions going back in time could never be changed. That's one of the reasons this was so valuable. You could look back and know that a transaction happened and know that nobody could tamper with that, nobody could change it. Once you had the DAO, people wanted to go back and change these contracts so that this person who seized all of this money, that those transactions wouldn't be valid. But that struck at the very core of what Ethereum was supposed to be. The divide over how to use Bitcoin in the blockchain is really part of a much broader debate our society is having right now about open versus closed systems. With virtual currencies in the blockchain, the original believers in this technology, and I think a lot of people in Silicon Valley, still have this idea that the most important part of this system is that it's open, that anybody can use it, that anybody can participate. Just like in Wikipedia, that anybody can come in and edit the entries and add their expertise and knowledge to the system. I think on Wall Street and in government, there is a suspicion of the sort of open system that Bitcoin or Ethereum represents, where anybody can participate. In order to maintain the security of the system, I think on Wall Street and in government, there's the desire to have a sort of limited number of people participating so that you can essentially know that you can trust everybody within the system.
That's totally on background.
Totally background. Can you blur my face? Just leave my purple tie, which is going to be the only tie in the entire documentary, is R3.
And like your voice changed.
With like that voice distortion box. Exactly. I could have used that earlier today. Yeah.
We don't believe in proof of work.
R3 is currently building towards a permissioned system, a private system, because that is the mandate we have gotten from our banks, because they are being told, and they have a strong understanding of client privacy laws and various different other confidentiality provisions, but also it's the mandate they're getting from their regulators that they have to play by a certain set of rules.
I don't particularly have much interest in the private blockchain sector. It doesn't seem to me that you get much benefit from having a closed ledger, a private ledger. I mean, sure, there are some benefits, but what is really different between a private ledger built on blockchain technology and a private ledger built on, SQL database technology?
Major financial institutions are skeptical about open ledgers for a set of reasons. First of all, Wall Street operates under a set of regulatory constraints that they can't afford to just ignore their central bankers or their various different securities or derivatives regulators, their conduct regulators.
I have a front seat to the question about, can Bitcoin technology, blockchain technology work in a regulated environment, because I'm on the board of a company called Coinbase, which is probably the leading exchange and hosted wallet provider here in the United States, and one of the leading companies around the world, and they have to operate in a regulated environment.
If you look at the Bitcoin debate right now, where they're arguing over block size, and they're having trouble scaling that system, and they're only at a point now where they can handle 7 transactions a second, and the world of global finance handles thousands, if not tens of thousands or hundreds of thousands of transactions every second, if you include credit card swipes and interest, trades and securities and et cetera, et cetera.
I'm not yet convinced the private blockchain is anything new. It's probably
a tool to help information sharing between banks. But then if you consider that information sharing has to be associated with common codes of business practice, then you also have to consider that it's a route towards cartelization of the banking sector. And in the worst case scenario, it creates a sort of one bank system.
You know, at a high level, I just kind of think of it as an industry grappling with a new technology and not being, you know, not really liking what they see.
Silicon Valley vision used to be, although it's evolving, is one in which the future of money looks nothing 5 or 10 years from now the way it does now. The ecosystem is different, the participants are different. Banks and central banks don't play the role that they currently do now. And they're developing technology to empower a new world. Wall Street doesn't think like that.
It could be quite disruptive to their business model. This is a network that you don't get charged to move money on, right? And a big part of how banks and brokerages make money is they take a piece of the transaction.
Silicon Valley institutions have kind of looked upon banking and gone, well, what do they really do? They deal with information and they deal with databases and they deal with risk. And really, we kind of do that as well. So why shouldn't we do the business of banking? We're technology firms.
For most of Silicon Valley's history, Wall Street has been the customer. But I think in the past decade, going back to maybe the late 90s or the early part of the 2000s, a lot of entrepreneurs, and really entrepreneurs are where this thing starts, VCs tend to follow, started to see Wall Street as an industry that they could compete with.
Banks have always been technology firms. They've never not been technology firms. The only difference really is that banks are technology firms who take risk and then after a while get in trouble for taking that risk and then they suffer the consequences.
A lot of people use the example of Uber or Airbnb. And the example there is they wanted to be innovative. They went out and broke a few rules, busted up some china in a china shop and then asked for forgiveness later. Well, that's one thing if you're taking on the taxi cab commission of a town somewhere. That's another thing if you're taking on the hotel authority of a municipality somewhere. If you're taking on the central bank or the Federal Reserve, if you're taking on the equivalent of the Securities and Exchange Commission, and you're just going to decide not to play by the rules, you're just going to decide to break the law where they have both criminal and civil ability to come in and hold you to account, that's a much, much bigger issue. That idea of just deciding to break the rules and upend the entire financial services is frankly naive.
I think that there are changes afoot in society that are actually begging for these technologies to get to the point where we can actually build stuff with them. Bitcoin and blockchain technologies are waiting for a killer app or a series of killer apps that will make it obvious to people why this technology really matters.
There's one vision of the future in which either the open systems like Bitcoin and Ethereum win, or the closed systems being developed by banks and governments win. But I think there's another vision of the future in which these systems can actually exist alongside each other and interact with each other depending on what somebody wants to do with their money.
Change from one kind of economy to another is likely to be incredibly painful, but when we get to the other side, it'll be better.